For its role as a facilitator of company loans, the peer-to-peer lending network known as Funding Circle has garnered a large amount of traction in the existing financial landscape. In spite of the fact that it provides small and medium-sized businesses, SMEs, with an alternative source of finance, it is very necessary to do an in-depth analysis of the drawbacks that are linked with the platform. By shedding light on some of the potential problems and challenges that may be encountered by both borrowers and investors when interacting with Funding Circle, the purpose of this film is to encourage viewers to take action. Risk and uncertainty. There is a certain amount of risk involved with peer-to-peer lending platforms such as Funding Circle, which is one of the inherent drawbacks of these platforms. Borrowers run the danger of defaulting on their loans, which can put each of the parties involved in the transaction under a significant amount of financial strain. It is possible that peer-to-peer lending platforms do not have the same level of risk assessment as traditional banks, which frequently have severe lending standards. As a result, investors may be exposed to greater default rates. Limited regulatory oversight. The environment in which peer-to-peer lending platforms operate is substantially less regulated than the environment in which traditional financial institutions must operate. This lack of tight control can lead to problems such as inadequate borrower assessments, which may have an effect on the quality of loans that are created through the platform. The absence of solid regulatory frameworks may also make it difficult for investors to seek recourse in the event that they are involved in fraudulent activity or disputes. Interest rate volatility. Despite the fact that Money Circle gives borrowers the ability to gain access to money through channels that are not typically associated with banking, the interest rates that are given can be subject to unpredictable fluctuations. The platform is responsible for determining the rates, which are subject to change over time depending on a variety of factors, including as the current state of the market and the perceived level of risk connected with the borrower. The unpredictability of the future may present difficulties for both investors and borrowers when it comes to making plans for the future. Liquidity concerns for investors. The low liquidity that Funding Circle investors face is a barrier that they must overcome. There is a possibility that peer-to-peer loans do not have the same level of liquidity as traditional investments such as stocks or bonds, which can be easily traded on established markets such as the stock market. There is a possibility that investors will have a difficult time selling their loan holdings in a timely manner, particularly during economic downturns, since the demand for such assets tends to diminish. Impact of economic downturns. Peer-to-peer lending systems, such as Funding Circle, are susceptible to experiencing significant fluctuations in their performance when the economy is in a poor state. During periods of economic instability, firms may experience difficulties in their financial situation, which can result in an increased likelihood of loan defaults. When this scenario occurs, it has the potential to have a big impact on investors who may see their returns on investments decrease or possibly face losses. Operational and technical risks. For the same reason that any other online platform is vulnerable to operational and technical hazards, Funding Circle is as well. It is possible for the platform's activities to be disrupted by cybersecurity threats, system outages, or technological malfunctions, which might potentially cause annoyance for both investors and borrowers. In addition, the platform's reliance on technology makes it vulnerable to the possibility of data breaches, which could result in potentially sensitive information being compromised. Limited diversity in loan types. The primary mission of Funding Circle is to offer short-term loans to companies that are classified as small and medium-sized. Despite the fact that this specialization is designed to serve a particular group of borrowers, it restricts the variety of loan packages that may be obtained through the platform. Investors that are looking for a wider variety of investment options inside the peer-to-peer lending industry may find that this lack of variety is a barrier to their successful pursuit. Challenges in due diligence. It is possible that investors on Funding Circle will encounter difficulties while attempting to carry out exhaustive due research on potential borrowers. Peer-to-peer lending platforms may rely on credit evaluation criteria that are less severe than those used by traditional lenders, who have established procedures for conducting complete credit assessments. Because of this, it might be difficult for investors to come to an appropriate conclusion regarding the creditworthiness of borrowers. Impact of regulatory changes. It is important to note that the regulatory environment surrounding peer-to-peer lending is fluid and open to change. Changes in rules have the potential to have an effect on the capabilities and viability of platforms such as Funding Circle. Both investors and borrowers are required to maintain a level of awareness on the latest regulatory developments and be ready to adjust to any changes that may have an impact on the financial arrangements they have made on the platform. Customer service challenges. The customer service provided by Funding Circle has been subject to criticism for being less responsive and transparent in comparison to that provided by established banking institutions. Borrowers and investors who experience problems or have questions may find it difficult to acquire support that is both fast and satisfactory. It is possible that customers of the platform would experience annoyance and unhappiness as a result of the lack of robust customer assistance. Despite the fact that Funding Circle provides an alternate channel via which businesses can get funding and investors can diversify their portfolios, it is essential to be aware of and comprehend the drawbacks that are associated with the platform. A full analysis of Funding Circle's downsides is crucial for those who are contemplating participation in this peer-to-peer lending platform. These drawbacks include inherent risks and inadequate regulatory monitoring, as well as difficulties in liquidity and customer support. In order to successfully traverse the potential traps, it is essential to conduct exhaustive research, conduct a risk assessment, and have a clear understanding of the platform's dynamics. This is true for any financial decision.